Hello everyone, this is Bella talking. Welcome to another episode of my video. Since we've almost finished talking about pullbacks, these videos are just a little bit of trading experience. After that, we'll move on to the next chapter. This video is divided into 3 parts. First, a brief summary of the pattern of callbacks, then we discuss the question of why to learn technical analysis, and finally recommend some trading books, most of which are good books that I have read, because some of my friends said they wanted to learn trading but the books they bought were not good. The quality is pretty bad, so today we're going to recommend some books that I think are pretty good for you to study, and I originally planned to do a whole video review to summarize the pattern of our callbacks, but on reflection I realized that everything I was going to talk about was covered in the previous video, whether it was simple or complex callbacks of trends, or the failure of the pullback trend or the success of the pullback trend I have talked about. So today we are here to simply remind the attention of the trade pullback form can be. The first one is very important. The premise of a pullback is that there has to be a trend. If the current state of the market is a trading range and a potential reversal pattern, then we should not go back and participate in the market. I think some people in the group have made this mistake recently. The market has been range-bound and we're trading range-bound at this point in time, not retuning. But, because of the interval and inversion I have not talked about, so we still at this stage, to learn first do not trade. The second thing is that simple pullbacks fail and then they turn into complex ones. Complex or refailed market conditions change. How to understand? That is to say, after a simple pullback into the market, the price does not continue to the trend direction, and does not bring a trend direction breakthrough, then it may be a simple pullback failed, it may take a complex pullback. If we trade this complex pullback to the trend direction of the breakthrough fails again, at this time, the market state may have changed. It's no longer a trend state and it's probably going into a potential range, or it's going to lead directly to a reversal in what we'll talk about later in the range piece and the reversal piece, which is a very important premise to say how do ranges and reversals come about. Most of them are pullbacks that fail, and it turns into a logic of intervals and reversals that you have to understand and understand. Now let's talk about the question, why should we study technical analysis? Why should we use technical analysis to invest and trade? Recently chatting with Mr. Luo, I said that I could not accept the ideas of these novices or leaks, why they do not even have the basic trading skills and basic technical analysis strength. At this time, Mr. Luo replied, because most people don't learn technical analysis at all, they don't believe in technical analysis. They like to listen to people interpret the fundamentals and listen to people interpret the news to judge the good and bad and then watch the price rise and fall. At this moment, I suddenly realized that it is because I personally entered the market, basically doing trading and have been learning technical analysis. In my opinion, technical analysis is really very simple and common, which should be learned by all participants. However, I have neglected that most people in this market still lose money, and most of them do not learn technical analysis, so I would like to discuss it at this time. Explain to you why we must use technical analysis to invest and trade. If you use fundamental analysis to participate in the investment market, so how do we interpret that when we don't have any advantage over the dominant force? First of all, the amount of funds of our individual retail investors is very small. At least thousands of yuan, tens of thousands of yuan in play, more than a few 100,000, 1 or 2 million people may be playing, only a few people can come up with more than 5 million yuan to participate in the fund. However, if you say that I have more than 10 million renminbi to invest, then you do have an advantage in the amount of capital, but I believe that only a few people can put out this level of capital. If you have a small amount of capital, your long-term position strategy will be bound to be limited. How to understand? Suppose you are optimistic about a variety. It doesn't matter if it doesn't go up for 3 or 5 years, because they have a lot of money, they don't care about that time and they don't care if 1 or 2 of them rots and doesn't grow. And what's the main thing? Let's say this big player, he has 50 million, he buys a lot of varieties. He doubled 50 million to 100 million in 3 or 5 years, so he made 50 million in a few years, which is very important. If you are an individual participant, you have a very small amount of money. For example, if you are playing with 100,000 yuan and 200,000 yuan, you make 5 times in a few years and you only make 1 million. Let's leave aside the idea that you can quintuple in a matter of years. But even if you do 5 times, you only make this amount of money, you don't have any advantage over the main force, and because you have a small amount of capital, you can't buy more varieties, and you can only say I like one industry, I can only buy 1 or 2 varieties, 1 or 2 stocks, 1 or 2 coins, and you can't afford a big float loss. Let's say that when you're doing a batch position and the price has gone down 50 or 70% from your initial entry price, you're probably not going to be able to live with that loss, and if you're wrong this time, let's say you think it's going to go up in the future and it hasn't gone up in 5 years. Wouldn't you have spent the last 5 years of your life in this position for nothing? The main body is not the same as the main body will eat a lot of varieties and you can only buy a few. Then you have not risen all these years, are not all in vain. Second, we retail participants are limited by their own level strength. We cannot get first-hand accurate information. People who like to speculate on the news must know that in most cases, the main force must know the news before you, whether it is the financial report of listed companies or the good or bad news they released, even government policy changes, they may have their own channels, they may have their own connections. There are a couple of news media in the currency world and they're not regulated. If you want to invest in stocks, the stock market media is regulated at least to a certain extent. But the currency world media is not regulated by anybody and they publish whatever they want, and it's happened more than once that they publish false news, they publish outdated news, they interpret things in a subjective way. This is what they've done many times in history. What they've done to control retail investors is to say, if you're a currency trader, you know the release of some important economic data, and for the major institutions, they have robots that process that information. And at the moment that the data is released, they can process it and order it, and we see the information too late. In a matter of seconds we've already lost the best price, so if you move the news in any way, you're behind the main force and you don't have any advantage. Thirdly, limited by our logical level and vision, we may not be able to deduce the correct conclusion from the known information. Some people may say that they have identified an industry and think it has great prospects and development. And the products related to investment in the future will surely make money in the future. Then I would like to ask you how you got this conclusion. Have you done a thorough study of the industry yourself and summarized the data? I've done a thorough and logical analysis of the data and come to the conclusion that I don't think most people do, but what about a lot of people? He heard an analyst say that this is good, this is very promising. You can buy or listen to friends say, oh now this liquor, oh good, you can make money, now this car stock or new energy stock is very good, you can make money by buying this, a lot of people are hearing this to buy. Do you think your conclusion is correct? Then some people might be able to do some data mining, some analytical thinking on their own, but I say that if you really have the ability to analyze the current economic situation, the current market context, and you can correctly infer what a market is going to be 3 or 5 years from now, then I don't think you need to invest. You go and submit your resume to the big investment banks and they're going to hire you because you have the ability to do that. You can make a lot of money and you don't have to invest. Number 4, does price really return to value? Return to value. A lot of people who trade fundamentals often say that if the current price is far below the value of the product, you can buy it because the price will eventually return to the value level. I don't need to give you an example of that. You can see for yourself that a lot of small coins and small stocks and bad stocks can grow by an amazing factor of 10, even a 100-fold increase, while the companies that are actually doing the work, the teams that are doing the work, their stock prices, their currency prices have not gone up very much or even gone down. You say this price is really a return to value? We all know how the price goes up. Because there are more buyers than sellers, which means there is more power to buy than to sell, because there is money coming in and pushing up the price of the product. And whether the money is willing to push up the price and whether the product is worth something, is there any necessary relationship between the two? In fact, there is no money willing to push up the price of a variety of products because they know that the push will make them profit, and that is all capital is profit-seeking. Let's talk about how long it takes for this price to return to value, assuming it does. I'll give you two examples. One is Microsoft. Microsoft, if you knew the value of the internet in 2000 when the internet was just coming into the public eye, you knew that this was the future, you bought the Microsoft stock, but what happened after the dot-com bubble burst? You'd have to hold a position for a decade to get back to the price at which you entered the market. Even though Microsoft shares are now well above 2000 levels, you can really hold a position for 20 years. Second, let's take a closer example of Bitcoin. If you recognize Bitcoin in the bull market of 17 years and you feel that blockchain is the future development direction and is very valuable and will rise, then you buy Bitcoin at the time of $16,000. How many years will you have to hold the position in the bear market to return to your opening price? So will the price revert to value? Or how long it would take if he did return? Is he really something we can afford for our individual retail investors? After listening to me talk about these points, you can find that using fundamental analysis to participate in the investment market, no matter for ourselves or compared with the main force, we do not have any advantages in the beginning of the game, we are directly in a very disadvantageous position. Then how do we win the game? The answer must be very hard, and the best thing for us to do is simply not get involved. Using technical analysis to participate in the investment market, the disadvantage between us and the main force is narrowing. How to understand this sentence? First of all, everyone is equal in front of the K line, whether it's the main participant or the retail participant. The K line is the same. It's a very simple sentence, I don't need to explain too much. Whether you're a retail participant with only a few $1,000s, or you're a few 100 million main participants, let's look at the same breed in the same cycle. The K line is definitely the same. It can't be that this K line is positive for the main force and it's negative on our K diagram. It can't exist. The exchange can't give us different treatment on the K chart, can't give the main force a K chart and give us a K chart. Second, the main capital of the game out of the entrance will show traces on the K chart. This sentence is very simple to understand. We this kind of retail participants have a small amount of money, tens of thousands of dollars in the game we enter and play, and the K chart does not show any ripples. But if it is the main capital, their size is very big, they want to come out is not so easy, they're gonna leave a mark on the K chart. It's easy for someone who studies technical analysis to recognize these signs, but for someone who doesn't understand technical analysis and is a big believer in fundamental investing, they think you're all a fraud. They don't believe it's decipherable, then there's no way around it, right? If they don't believe it, they won't believe it. All we have to do is see. Third, small money can operate freely. When we talked about fundamental players, most of them are long-term investors. Small money has a lot of restrictions on long-term investing. But if you study technical analysis, you can trade charts of any period, and if you have a small amount of money and you open up a 30-minute period K chart or even a 15-minute period K chart, you can find a lot of opportunities for small money, and by doing a lot of trades you can grow your capital in a short period of time to a large amount that you can invest over the long term. Fourth, technical analysis logic has been practiced and verified for nearly 100 years, and the data are open for anyone to learn. There's a misconception that some people have that the day of technical analysis is something that's only been around for a decade or two, but in fact there were people who were trading in technical analysis in Livermore's day or even earlier, and it's been explored and summarized by later generations. The technical analysis learning materials we see today are very systematic and conducive to learning, and these logics have been validated for nearly 100 years. We said earlier that if you want to do fundamental analysis, if you want to see what's going to happen in the future, you need to be very logical and you need to think, which is very hard to train, and most of these talented investors, they are born with these skills. But for technical analysis, there are systematic books that you can learn. Anyone can learn these correct technical trading concepts, technical analysis systems, technical analysis tools. Number 5, doing technical analysis. Whether or not you're going to make money in the long run depends on your ability to trade. Not on luck, not on the whim of the dominant force. If we do fundamental investment analysis, we're going to see the future of an industry, we're going to see the future of a company, we're going to buy this stock, we're going to see this digital currency, but when the price goes up depends on when the main force is going to buy and push the price up. If the main force is not willing to push and he is not going to buy, then your position will never make a profit. So whether you can make a lot of money is a matter of luck. But for people who do technical analysis, the core of our profit is not to forecast the market. Our profit depends on a set of win rate and profit and loss ratio with a set of system as long as we participate in the long-term participation of many times. We will be able to make money. We do not need to see luck, also do not need to see the face of the main force. Here I speak to misunderstanding of many people. The first is that many people think that the main force is not going to lose money, and that's a very big misconception, that the main thing is that you're trading, you're investing, and you're losing money, but they're making money in the long run. If the main force didn't lose money, if the organization was always going to make money, then you look at the world's wealth list right now, and it's full of investors, and there shouldn't be any of these other entrepreneurs. The second point is that a lot of the big investors who look like they're investing are actually trading, not to mention one of the most famous players in history, Livermore, who was a thorough trader. He even wrote in his book that people who make fundamental bets are gambling. Some of the more recent people like Soros, who is also a thorough trader. Whether it's his historical trade analysis by hand or his own book you read, you should know that he is a trader. Even Buffett's famous saying, buy quality companies at a reasonable price. But we looked at his operation last year. Buffett bought Delta Airlines last year in the midst of the pandemic, and his judgment was that the overall impact of the pandemic would be over, and that this valuable industry would recover quickly, and he bought Delta and a number of other airlines. But he sold it after a while, because the stock market was going down, and he sold it right at Delta's lowest point. So Buffett has always been the god of value investing. So why does he do this? He does the same thing. He trades, and you stop losing, and the point he sells must have triggered a level at which he thinks he no longer holds the stock. The last thing I'd like to do is to recommend books on price behavior trading that I think are good, and this is limited to price behavior, because there are other systems that I don't really like and I haven't seen much of. The books in the picture you can look at first. And I'm going to go through each of them in the back and just give you a brief introduction of who's right for who's not right for you, and then we're going to look at the books in the first part, which is very basic, which means if you're a person who can't read a K line, you're going to start here, and I didn't think there should be people like that, but there are actually a lot of people who can't even read the K line, the open, high, close, low, yin and yang lines, and that's kind of shocking to me. But you can start with this book. This is the Japanese candle chart technique, and this book is going to talk a little bit about the K-line shape of the candle chart, but I personally don't like this book. Why? It's mainly the audience of the book, and a lot of the people who finish the book are going to ask the lower level questions like what? For example, a lot of people would ask me, if there's a twilight star or a dark cloud over here, can I come in and trade? And that's a really bad question. Why do you make a trade? You don't have to look at 1 or 2 K lines. To get in, you must have analyzed the market context to allow you to move in a certain direction, and then you see K lines coming in like this, and then you trade. But most readers of this Japanese candle technology ask the question, which I don't like very much, is you see a K line and you want to trade. It's really wrong that you see a K line and you want to go in right now. But again, if you're really new and you don't even know how to read K line, you should read this first, the book. The second book is Technical Analysis of Financial Markets, which is also a very basic book, which is what I read when I was studying trading, and it talks about very basic things like algorithms of indicators. Some of them are trend lines or some simple forms, all kinds of very basic things that if you are new to it and you don't understand anything, you have to read it on your side. But you have to be aware that after reading this book, you can't directly operate it as too basic. When I first learn, including a lot of people at the beginning of learning, there will be such a mistake, is that I learn this, I think I can make money. In fact, it is not the case at all. It is too basic. It is a basic skill. We can't rely on such basic skills to dress up these old masters, right? So make sure that this is an idea that you learn and don't think that you can make money after learning. He is just laying the foundation. The third book is The Naked K-Line Trading Law. In fact, I have not seen this book is recommended by teacher Luo, and then I also briefly read the video. What is the audience of this book? If you already have the basics, you know some basic technical analysis and you want to learn about price behavior, then this is probably the book that you can get started with, and it's also a very simple book. It just talks about some very simple K-line patterns, and then it talks about some trading entry. Why would you recommend this book? Because I looked through it and I found that there were cases in it, and I really like the books that explain cases in detail. And it tells you the logic of a transaction and how you have to feel about the market and how you have to analyze the market as it operates, and I think those transactions are very important. There are a lot of books that just talk about logic and don't talk about cases, and they don't make any sense to me, and then they talk about the cases, and they're like, they're rubbish books. They're books that are written to sell books rather than to actually teach you how to trade, and this is a book that I did a quick look at, but it's also a book for beginners. If you have a foundation and you want to do an introduction to price behavior, you can look at the Naked K-Line Trading Method. And it's also one of the books that seems to be written by Chinese people. There's really very few books written by Chinese people that are realistic. Most ancient people write technical analysis books that are really just a bunch of crap and stuff that's out there, and then the next book starts to get a little bit more advanced and it requires you to have a foundation. In the beginning it was Wyckoff trading, which is also a very classic trading method, and then it was relatively small in the beginning and not very popular in the last few years, and then this trading method has some believers, but when I read the Wyckoff trading method, in fact it is just some form of price behavior. Price behavior is not so amazing, but it's also a good book to study. It can just give you a new perspective on reading the market. This is the version of the book that I don't really recommend, but I bought it myself. I read it and I realized that 70% of it was good and logical, but there were 3 layers of it that were basically bullshit, and we can see this, and I looked it up, and this is a Chinese American, and Chinese people really love bullshit when they write books, and they want to create an image that they can see through the main force, and they want to create an image that they can't lose money on a deal, so you can sell books. And I think this is all bullshit, because you can't make a deal without losing money. If there was someone who couldn't make a deal, and within a few decades it would be the richest person in the world, and that's the image that a lot of people who write books and a lot of people who are technical analysis bloggers are trying to create. But the saddest thing is that a lot of people who are new to the game are willing to pay for that image, and they think this guy is awesome and I'm going to control the market, and it's all an afterthought. And of course you can read it if you can find another version of it on your own, but in general it's Wyckoff trading, and it's worth learning about. The next book, it's called YTC, The Price Behavior Trader, and I haven't read it either, but some time ago someone asked me if it's a good book to learn about, and I went and looked at it, and I didn't think there was a mainland edition, so I downloaded it as an ebook, and I looked at it and it was fine, and he had a very detailed diagram in the book and a very detailed logical derivation of the transaction. These are my personal favorites, and we can look at the list in front of them, and then we can look for cases, and we can see that it's his explanation of the case that allows us to have this logic in it. And it's really important that a lot of the books, or a lot of the bad books, he's talking about a trade and he's just telling you that it turns out he's not careful enough about the logic of the trade, so you learn it for nothing. You don't know why prices move. But this book, it's a little bit more advanced, and it requires you to have some grounding, and it's not really recommended that you just come up and read something else and get some grounding. The next book is Super Short Trading of Foreign Exchange. This is the author. I read this book by myself, and the general feeling is very good. In fact, he is relatively elementary. It tells you a lot about how useless sentiment is in trading and how you can beat it, and one of the things to mention about it is the chart that it uses, because it's a super short trade in FX, and it has a trading cycle chart of 70 euros per USD, and it has a very small period of trading even though it doesn't have a trading cycle. Right is small, but the price behavior is the same in any time frame in any chart, and it's important to understand that whether you're doing a 5-minute chart or a daily chart, you're going to see the same logic in the K-line analysis, unless of course Unless you're in a market where there's very little volume, then you're not going to be able to look at the 5-minute parts. If you do is to exchange this volume is very big variety, then you do 5 minutes charts, say you even do 1 minute chart, you go to analysis, or without any problems want to mention here finally. If you want to further study in the field of price behavior analysis, want to master, want to reach the limit that you are about to see L. Brooks, this series of books, here I want to say that the difficulty of reading these books is very high. If you don't have the foundation, you'd better not look at them first and learn other things first. In the group, including my friends around me, there are many people who want to challenge themselves as soon as their brains are hot and want to learn. I heard that it is very expensive to buy books in foreign countries. One book often costs hundreds of dollars. If you buy these 4 books, it is totally unnecessary to leave hundreds of dollars to eat dust at home. If you want to be proficient and then you buy these books, you can take a quick look at this is one of the digital ones that I've read before, and then I looked at the paper book and it analyzes every single minute of the price movement, and it's called a K-line reading market, and you can see a simple K-line chart that marks so many K-lines, and you can read each of those K-lines, and it's really hard to read. No, you're not prepared for it, really don't read it. If you've got the basics of price behavior and you're pretty good at it and you want to go up and you want to be good at it and you want to be a master, then you can read it, and there's no problem forgetting to mention a little bit. And I'll just add that there are people who have said that they've gone through this series of books with no results. Why is that? Of course, let's leave aside whether he understands it or not, because this set of books is not about how to trade, it's about how to read the market, it's about how to read the market, it's about an analysis tool, and how to trade after you've learned such an analysis tool, that's another story. You have to set up your own trading system, and that's what you have to understand. All these books are about reading the market and not about the last part of trading, and I would classify it as a new law, and it's actually about trading ideas, trading emotions, trading psychology, and that's a very important part for a lot of people, because a lot of people, for example, they suffer from short positions, and they suffer from short positions. He likes to trade heavily, he likes to carry the single, is all these negative trading emotions, trading habits, we should eliminate, avoid, to get rid of. But I personally am not very good at building this kind of trading psychology, because for me, I am a more logical person. I don't have these negative things, so I don't know how to overcome, but I would recommend you to read some of these books, and it's a classic thing to know is that the trading techniques that are involved in it are kind of outdated and kind of old, and it's a simple narrative tracking system, but a lot of the book is about how to realize that trading is simply to implement a set of simple systems to make money. In the book, he analyzed some data logically, explained some cases around him, and briefly taught you how to overcome this. I think it is really necessary for many people to read. Many people's trading philosophy and trading mentality are really poor, and the last one is the psychoanalysis of trading, and I didn't finish it myself. I did a quick look at it and I put it down when I was downloading YTC Price Behavior Trader, but I think it's really important for a lot of people to have the right trading philosophy. It's much more important than you learn trading techniques, so we can just look at the table of contents, and you can see what he's talking about really new. It's really, if you have a bad habit of trading, it's really recommended that you read it, and we can see that at the very beginning of chapter 1, we told you that you were going to move from fundamental analysis to technical analysis, and that's what we talked about in the beginning, which is whether you're better at fundamental analysis or technical analysis. Right? Okay, so that's it for today. It's just a simple sharing session to help you develop the right trading philosophy, which I talked about in the very first video, which is that I think it's much more important for someone to have the right trading philosophy than to have a strong trading technique, and if you don't have the right trading philosophy, you're not going to be able to make money in this market in the long run. In the next video, I'll do a short video just to talk about that. How do you count K lines in the Brooks book? Because a lot of people say in the course of learning that they don't know how to say K lines is an important tool in the Allbrook system, and if you don't know how to count K lines, it's probably going to be very difficult to read the whole book. But if you don't decide who to read the book, it's not going to be important in the next video, so you can skip it. I'll do a short video in the next video. Thank you for watching, and please consider like and comments so that you can watch the following updates.